Wednesday, April 5th, 2023. Market analysis, Stan Ehrlich. Good morning. 10 o'clock California time. The S&P 500 and the other indexes I always start out with are heading south. Not a heck of a lot, 2.5 points, but still, because of yesterday's ER, official, red, blah, blah, sell signal, it's working perfectly. I'm expecting a little bit more correction down to close some gaps. But on the left side here, you can see on that 5-minute chart, they were almost low in last year, 406.11. And yesterday's high was, to be remembered, almost 412. So we're not really down, but 6 points or so from the high of the rally. So that's not a heck of a lot. We're not acting like this is something tremendously bearish, which is exactly what I want. The daily data on the right, and again, you can reach me at info@ersignals.com. The daily data chart on the right here does have my signature red bearish engulfing automatically turning red at the moment that the bearish engulfing and overbought conditions are met for my signals. Today is the first day that the ER3 could get short at the red dots. We're short, relatively close to the high of the day. That's a algorithm we've got for calculating where to go short. And I see nothing wrong with this at the moment. We're looking to close possibly this gap coming down all the way to 396.5. That would be fine with me. That would be the extreme. I don't expect it to come any more than that. But 396.5, where are we trading right now? 406? Oh, come on, 10 points. Not that big a deal, which is, again, okay by me. Remember, I'm basically bullish. So I think if we come down and close that gap, and again, gaps are like black holes in space, they tend to suck the price action back into the gap area, is going to happen again. So I'm going to be looking for oversold conditions and reasons to be a buyer or at least turn bullish from a commentary point of view if we get down to those levels. Let's look quickly at the other indexes here. We also have, and here we have the spider again on my a little more complicated daily chart. I really like how it's happening here. Okay, so I'm sorry, going to the DIA, the Dow Jones Industrial also had a bearish engulfing yesterday, an outside down day, overbought territory. I use a custom relative strength index, RSI as I'm calling it. And it has a lot to do with my signals period, as well as the Japanese candlestick, bearish or bullish engulfing. So DIA, we opened actually higher than my red dot offer. And I should be erasing this now, the rectangle, because yesterday's low was low enough almost exactly to close the gap. But unfortunately, that's the highest of 3 gaps. We still have this one to close and all the way down to 322-ish, which is a possibility. It really wouldn't ruin the overall trend, but that's pushing it. So if we can get down to 329 or a little lower, that might be the end of the break. Watch the RSI in the process. It doesn't have to get oversold. This is the bull trend. The moves up are supposed to be bigger, longer, and then the downside corrections. And we've seen that happen so far basically since October 13th, when I had a bullish engulfing ER buy signal on the low of the bear market of 2022 and the very beginning so far of the bull market of 2023, the turning day. All right, so I like what I see here in the DIA also. and I do not necessarily agree on all the time. But let's take a look at the QQQs. They are very important. I would consider them the most popular, second favorite index of mine. Spiders first. But what have we got? We've got a low today already lower than the last 3 days worth of lows. It just fell apart very quickly, even though it didn't have a ER red, bearish engulfing, blah, blah, sell signal yesterday. It was simply overbought for 3 days. That's why these are yellow. And we're coming into some support. Not that much, really, but yeah, fair. But there's a gap to close again. And this is around 308. So guess what? We might have a correlation of gap closures on 3 different indexes around the same point in time, I mean the same day, and everything turned back up at that particular point. That would be very interesting. I don't think I've ever seen that. They're doing fine. We're down 210 at the moment. The Dow is actually a little bit higher on the day, holding up pretty well. And the Qs are down to 440. That's a pretty decent down day. And remember, it's still just slightly after 10 o'clock California time. Futures, we're going to be looking at the futures here. Some very interesting things happening. Interest rate futures. This is profound. We are about to have a new high close since last approximate September. That's quite a while. And if it can get above the high only a couple of weeks ago and close there, which I think is going to happen, if we stay where we are, I would expect that to happen maybe tomorrow. We are in the process of an significant intermediate to longer term bullish breakout. The next stopping point on the way up could be something in the 120, 122 ballpark. Yeah, I think that's about right. 122, maybe slowing down or stopping a little earlier than that, but this is quite bullish. I like what I see, but it's got to stay here. You cannot start going down at this point. It's make it or break it. Let's look at the next chart. This happens to be the S&P 500. Yesterday, we had a bearish engulfing, as did the spider, as you would expect. But remember, the E-mini and the micro-mini, et cetera, have different trading hours. News around the world that can affect and does affect our markets doesn't care about the clock. And so sometimes you're going to get signals or not get signals on the E-mini that you might get in the S&P 500 spider. Just want to point that out. Not everybody necessarily had thought about that. We're short, looking very good at the moment. Down 27 on the E-mini. Next chart. Natural gas is so far staying below that blue line we broke a week ago, and I talked about it a week before that. So this is bearish. This is a little rally up against a little bit of resistance, and I'm expecting natural gas to make new lows very soon. Next chart. Soybean meal, the bullish buy signal we had on Friday of last week did not work. We today broke below the low of the bullish green ER buy signal, and there was a little loss. I can pretty guarantee that either the 3ER1 also had a small loss, and ER3 had a little bit larger loss. Nothing major. Definitely smaller than the range of the green bullish engulfing, to give you an idea. Next chart. Soybean oil, bullish buy signal 3 days ago, was not able to get a retracement the next day, but yesterday we came down to the green dots and we're long. We're trading right now just about exactly at the same price. Need to turn back up again ASAP and make a high higher than 57, and I'm on my way up. Plus, this looks a little like a head and shoulder bottom here almost. That low right there looks like a shoulder low. That's the head of the formation right there, and that's the first shoulder low. Fairly symmetrical. I love it when I get a bullish engulfing on the head or either shoulder or both, for that matter, on these kinds of patterns. That signal back there was great. Not that many in bean oil. Next chart. Wheat. got the bottom of the market so far, but it won't start trending higher. It's just bobbling around here. Now maybe a tiny loss, but we are not definitely anywhere near the low of the bullish engulfing, which did catch the bottom of the market so far. We're not oversold or overbought one way or the other. I don't know. I'm just waiting for this thing to get kick-started here. Otherwise, it might be unlikely. The long positions would have been out by now. Next chart, neutral at the moment, but expecting rallies. Live cattle, we got the bottom almost on the low day. It took off like a bat out of hell, straight to the upside almost every single day for 1, 2, 3, 4, 5, 6 days in a row. And then we had a bearish engulfing 2 days ago, Monday. We are short on Tuesday. It did not yet make a new low, lower than yesterday's low, and we're a little bit higher than yesterday's close, but not anything particularly dangerous. I would not be surprised if it turned back down again ASAP. That's what I'm kind of expecting. Next chart, platinum and gold and silver. We got the bottom, every one of them. Platinum, we bought the low February 27th on a green bullish ER buy signal. Today, it's made a new high for the trend up, although it looks pretty lousy at the moment. Net lower on the day by quite a bit and not too darn far from a bearish engulfing. Unfortunately, it's not overbought, so I'm not going to get any sell signal out of it, but I certainly don't like the fact that it's not holding those new highs. A good bull would not do that. Something to be a little bit wary of. Next chart, but I'm bullish. Silver, overbought. 3 times now in the last couple of weeks. Do not chase this market straight up. It should have a downside correction. I already had a sell signal 2 days ago, but I explained to people, when you buy into a new bull position and there is no offset, you are not necessarily wanting to add to that bullish position, although this signal also worked. That's wrong. Something's wrong here. Okay, I'll fix that. But this bear signal a couple of days ago, which is legit, did not work. So in overbought conditions, I don't want to follow the market up. I'm not a buyer. I'm looking for sell signals and or reason to go short otherwise. Next chart. This happens to be gold, and certainly we did get the bottom on 2 lows, creating a double bottom. The lowest low was the first one on March 1st, the bottom. Today, much better. New high for the trend, unchanged at the moment, holding steady, and that yesterday's holding at that price, excuse me, was a new high for the trend on a close as well. So today being flat, okay, it doesn't mean too much. We are getting close to overbought, so I would not be surprised to see it slip a little more and then start to head higher or just plain head higher. Next, cocoa, not too much to say. Next, potential bullish breakout. This is profound as hell. This is about to have a new high close and maybe a new high as well. Since last September on interest rate futures, this should be very bullish. This should put interest rate futures into the 145 for the bond market range. Liking it very much. One more, orange juice. Don't run after it. Overbought, looking for a downside correction. High-grade copper, green buy signal had lost a little bit and we're out, so now we're flat again and neutral at the moment. Sugar, too strong, too quick, too fast. Look out, it's going to come down. And we have a brand new, today, sell signal in corn. So, after being overbought for several days and sliding a little bit, we have my ER bearish sell signal. The last one I'll point out, because it worked real well, was on December 30th, and it just went down very sharply for a couple of days. Not that that's going to happen again, but it could. We got a bottom buy signal right there. We got 2 buy signals at a modest rally. Not really much. Nothing else on this time frame here. Next chart, crude oil. Right smack against resistance, guys. Not only that, 4 days ago, 3 days ago, you had a bullish, what I would look at as a exhaustion upside gap into a resistance area, into overbought conditions, I think there's very high odds personally that this is right about time for it to go right back down to 75 or lower, and maybe very quickly, and maybe immediately. Next chart. Lean hogs. Oversold, probably going to have a little bounce. It might drop off a little bit more. And heating oil, I'm waiting for this to turn around, head south, and break below our two support lines, which we've moved away from in the last few months a bit, but from an oversold condition for one particular day, bouncing off support. And going back to soybeans, we're now, having had a bullish engulfing on Friday of last week, had some bullish potential, sagging back a little bit today, but not even below yesterday's low. So I don't see anything wrong here. I'd just like to see it make highs higher and on a closing basis than 1530 real soon. We talked about this before. 10-year notes are on the verge of a new high for many months. I think it's the same thing as bonds. They're both looking very, very similar. Very, very bullish situation. Have a great day. Talk to you tomorrow.